Hello everyone, welcome back to my channel Astra. Today we are going to discuss about book of original entry and the examples for that and the different rules of journalizing. That all things we are going to deal with today. So let's move on to the topic. What is book of original entry? Book of original entry means it's a book of prime entry. Prime entry means it's a book of record where the transactions are recorded for first time. First we are recording the transactions into this set of books, that is called the books of original entry. And in which order these transactions are recorded? These are recorded on chronological order. Chronological order means they are recorded on date wise in the order of happening or in the order of occurrence. We are putting transactions or recording transactions into the books of record. So books of original entry also called books of prime entry because these are the first record of transactions. That is why it is called books of prime entry or books of original entry. So here in this books of record, the transactions are recording in chronological order. Chronological order means date wise and time wise, that is based on the time of happening or due or in the order of happening, in the order of occurrence, date wise the transactions are recorded into books of original entry. For example, we can say journal book and subsidiary books are called books of original entry. Okay, now let's discuss in detail what is a journal book is. A journal book is a book of original entry. That is, before posting transactions to ledgers, we are making the prime entry in the books of original entry called journal book. Here journal book, the word journal book has been derived from the French word jour. Jour means daily records. Okay, that is it is a daily record of transactions where we are entering the transactions for the first time in the books of original entry, that is journal book. Here the transactions are recorded in date wise, that is in chronological order in which the things are happening or the order in which the transactions they occur, the transactions are recorded. So this is about journal book. Then the process of recording transactions in this journal book is called journalizing. That process of recording transactions into journal book is called journalizing. And the next thing, the entry made in the journal book is called journal entry. That is, while we enter the transactions into this journal book, that the entry we are making is called journal entry. Now we can discuss the types of entries. That is, we already discussed the entry or the transaction that entered in the journal is called journal entry. The process of recording and transactions into journal book is called journalizing. So the entries can be divided into three, that is simple journal entries are there, compound journal entries, and also contra journal entries are there. Okay, then what is simple journal entry? Simple journal entry, simply we can say where a transaction involves only two accounts, then we can say it as simple journal entry. That is, here in two accounts, one account is getting debited, one is debited and the other is credited. Okay, for example, we can say uh, X starts business with a capital of or X starts with business with a capital of rupees 2 lakh. Here the X contributes his capital rupees 2 lakh. Here the transaction will be recording. Here the two accounts involved are cash account and capital account. Okay, cash account and capital account. X contribution to business is rupees 2 lakh as his capital. So the accounts involved in this transaction is cash account and capital account. The entry in the business will be cash account debtor to capital account rupees 2 lakh, right? Here the accounts involved are cash account and capital account. Only two accounts are involved in this kind of transaction. Here one account is debited and the other account is credited. Okay. So simply a simple journal entry is a transaction that involves only two accounts is called simple journal entry. The recording of a transaction which involves only two accounts is called simple journal entry. Then next we can move on to compound journal entry. Compound journal entry is a kind of entry where the transaction involves multiple accounts or the entry involves multiple accounts. That kind of journal entry is called compound journal entry. For example, we can say if more than two accounts, here one account is debited and the other second account is credited, right? But in case of multiple accounts, more than one account, that is instead of one account, two or more accounts get debited or two or more accounts get credited in case of multiple accounts. For example, we can say we are charging expenses to profit and loss account like salary and rent. Then the entry will be profit and loss account debtor to salary account to rent account. Here either more or two or more accounts get debited or two or more accounts get credited, or both two or more accounts get debited and two or more accounts get credited, then also it can be called as compound journal entry. That is a transaction that recorded involves more than two accounts, that is involving multiple accounts, is called compound journal entry. Now let's discuss what is a contra journal entry. A contra journal entry are those entries which involve cash and bank accounts simultaneously. Then it is called contra journal entries. That is, if we are debiting cash account, then crediting bank account. That is, simultaneously both accounts are coming on the either of the side, that is cash account debtor to bank account or bank account debtor to cash account. Whatever may be the debit or credit aspect, the accounts involved in this transactions recording are cash and bank account. Simultaneously, if cash and bank accounts are coming in a entry, then it is called contra journal entry. That is, if cash account is debited, then bank account is credited, vice versa. So to record such entries in the cash book, we generally write C for contra in case of ledger folio column. While in recording journal, we mark C for contra entry. Okay, C is marked in ledger folio column. Okay. Now we can draw the format of journal. A journal will be having 5 columns. First column it is date column, then one particulars column, then ledger folio column, then amount column, two amounts column, that is one is debit amount column and the other one is credit amount column, the amount to be credited. Okay, this is the format of a journal book. We're having 5 columns: date column, particulars column, ledger folio column, amount column, both amount column, debit and credit amount column. Here I already told, in case of contra entries, if a transaction is involving contra entries, we will mark C for contra in contra entries column, ledger folio column. Okay, that should be noted here. Now we can move on to the rules of journalizing. Mainly there are two approaches of journalizing. First one, it is traditional approach of journalizing, and the second one, that is modern approach of journalizing. Modern approach, or we can say accounting equation based approach. Accounting equation based approach. In traditional approach, we classify the accounts mainly into two categories, that is personal accounts and non-personal accounts. And within this, personal accounts can be further classified as, first one, we can classify the personal accounts into three. Natural personal accounts means the accounts in the name of normal human beings is called natural personal accounts. That is, accounts created in the name of human beings are called natural personal accounts. Then about artificial personal accounts. Artificial personal accounts are those which are not living human beings, but they may have existence in the eyes of law. That we already, joint stock company is an artificial juridical person. Likewise, an artificial personal accounts is not human beings, but they have existence in the eyes of law. For example, we can say Reliance Limited, like companies, then sham provision stores, then that is bank account, that all comes under artificial personal accounts. Then about representative personal accounts, these accounts which represent certain group of people to whom or from whom amount is payable or receivable respectively is called representative personal accounts. That is, it represents certain group of accounts, group of people to whom or from whom the amount is payable or receivable is called a representative personal account. For example, we can say prepaid expense. That is, this is a kind of representative personal account. Now we can discuss about impersonal accounts. Impersonal accounts mainly includes real accounts and nominal accounts. Within this, real accounts consisting of accounts created for tangible or intangible assets is called real accounts. And within this tangible real accounts, there is another account, that is tangible real accounts. Tangible real accounts which can be touched or felt is called that is the accounts created in the name of assets which can be tangible in nature, that is, which can be touched or felt is called tangible real asset account. Here tangible real accounts which relate to such things which can be touched, felt, measured, etc. For example, we can say land account, stock account, etc. Land account, building account, etc. Comes under tangible real accounts. Then intangible real accounts which cannot be seen or touched, and this mainly represents legal rights. Example, we can say goodwill account, patent account, etc. Okay, so these all comes under intangible real accounts. Then about nominal accounts mainly includes revenue or expense accounts. All accounts which are simply opened as per the nature of the transactions. These nominal accounts are opened as per the nature of transactions, and this can be mainly include revenues or expenses, that is expenses and losses account and incomes and gains account comes under nominal account. So expenses includes rent paid account, salaries account, etc. Losses mainly includes loss on sale of asset account, loss due to decrease in the value of asset or increase in the value of liabilities account, etc. comes under losses account. Then about other classification of nominal accounts, that is incomes and gains. Incomes includes interest received account, discount received account, etc. Gains or profit on sale of assets account, that all comes under gains account. That is profit due to increase in the value of assets or decrease in the value of liabilities, all comes under gains account. Okay. Simply we can say this is the rule of journalizing for debit and credit according to traditional classification. We already discussed traditional approach. Categorize the accounts into three categories: personal accounts, real accounts, and nominal accounts. Then how we debit or credit these accounts, that we are going to discuss now upon the traditional approach. Okay, so personal accounts, in case of personal accounts, we always debit the receiver, credit the giver. Okay, so personal accounts we already discussed. There are three kinds of personal accounts: natural personal accounts, artificial personal accounts, and representative personal accounts. For example, we can say if a transaction involving personal accounts, then the receiver should be debited and the giver should be credited. That is the rule for personal accounts. Then in case of real accounts, that is in case of asset account, we debit what comes in and credit what goes out. Okay, that is if purchasing machinery, for example, we can say purchases machinery for cash. Okay, here what comes in is the real asset machinery, and what goes out the real asset cash. So machinery account debtor to cash, this will be the way of recording. That is, in case of real accounts, we will be debiting what comes in and crediting what goes out. Okay, so that is the rule for journalizing in case of real accounts. In case of personal accounts, we will be debiting the receiver and crediting the giver. That is, so in case of nominal accounts, the rule is debit all expenses and losses and credit all the incomes and gains. Okay, hope you got a clear idea of what is the traditional approach of recording the journal. So the traditional approach of journalizing classifies the accounts into three: personal, real, and nominal accounts. And within that, rule of debiting and crediting consists of personal accounts says that debit all the receiver and credit all the giver. Then in case of real accounts or asset account, we debit what comes in and credit what goes out. And in case of nominal accounts, debit all the expenses and losses and credit all the incomes and gains. Now we can move on to modern approach of journalizing. Here in modern approach, we classify, or we can say otherwise modern approach is called accounting equation approach. Okay, accounting equation approach. In accounting equation, we know the assets is equal to liabilities plus capital. So remember the accounting equation. So based on that accounting equation, we can say that in modern approach, we classify the accounts into five. assets account, liabilities account, capital account, revenue or gains account, and expenses or losses account. Assets accounts includes all those assets or properties termed as assets account. For example, we can say building, machinery, then land, patents, inventory, etc. comes under assets account. Then second types of classification is liabilities account. Here the accounts of lenders, creditors for goods and expenses all comes under liabilities account. Creditors account, lenders account all comes under liabilities account. Then third, it is capital account. The accounts of the partners or the proprietors who have invested money in the business are termed as capital account. That is, those who contribute capital to business, that person's accounts comes under capital account. Then revenues or gains account. These are the accounts of incomes and gains that the business has earned by selling its goods and services. For example, we can say sales account, revenue account, sales account. Then interest account all comes under revenue or gains account. Then expenses or losses account. These accounts which show the amount spent or lost in carrying on the business operations. That is, these are arising from business operation. Expenses or gains or expenses or losses or gains or revenues are out of business operations. So the revenue or gains arising out of business operations account comes under sales account, incomes, interest earned account all comes under revenue or gains account. Expenses or losses relating to the business operations comes under this kind of account. That is, for example, we can say purchases account, wages paid account all comes under expenses or losses account. Now we can discuss the rule of debit and credit according to modern approach. So as per the modern approach, rules of debit and credit, mainly we can say the accounts involved are as per modern approach are 5: assets account, liabilities account, capital account, revenue or gains account, expenses or losses account. Within this asset account, the rule of debit and credit consists of assets account is debited when the asset get increased. Asset account get credited when the amount of assets get decreased. That is, an asset account is debiting the increase and crediting the decrease. Okay. Then about liabilities, liabilities accounts get debited when the amount of liability is getting decreased, and the liabilities account get credited when the amount of liability is getting increased. That is, if liabilities increases, then it should be credited. If liabilities decreases, then it should be debited. If asset account is getting increased, then it should be debited, and if the asset account is getting decreased, then it should be credited. Likewise, in case of capital accounts, when the capital is increasing, then it should be credited. When the capital is decreasing, then it should be debited. Then in case of revenues or gains, the increase in revenue or the increase in gain should be credited, and the decrease in revenue or gain should be debited. Same, its ulta is applied in case of expenses or losses. That is, when the expenses get increased, that should be debited. When the expenses or losses get decreased, then it should be credited. So this is the accounting rule for recording transaction as per modern approach. For example, we can say in case of we are purchasing machinery for rupees 50,000. Here two accounts involved are machinery account and cash account. Right. Here machinery, the amount of machinery will be, after purchase, the machinery amount will be getting increased. Right. So increasing machinery, and which asset is getting decreased? Cash. So here the increasing asset should be debited. Machinery account will be getting debited, and the cash account is getting credited because the decrease in cash asset. So it should be credited. Here the increase in machinery asset, so that should be debited. So this is the way we apply rules regarding the recording of transactions in journal as per modern approach. Okay, hope you got a clear idea of what is books of original entry, what are the examples for that, that is journal book, subsidiary book, etc. And within that, what is a journal book is we already had a overall idea what are the types of entries made in journal, and also the rules of journalizing. Both approaches we discussed in a detailed way, that is traditional approach classifications of accounts, modern approach classifications of accounts, and the rules regarding the recording of transactions as per both approaches. Hope you got a clear idea on this. That's all about the topic for the day. Hit the subscribe button if you want to see more videos like this one. Okay, so hope you follow my channel. Please like, share and subscribe to my channel. Thank you once again.